I am very excited to welcome back Deso to the show. Kirian von Hest, welcome.
I'm glad to be back, as always.
Yeah, last time you were here, it was at the beginning of the year, and you said something genius that I really haven't heard anywhere else, which is that the Federal Reserve is not fighting inflation. They are keeping rates lower than inflation, which means that the return on a bond is negative because you're losing money because the CPI is higher than the return on the bond, right? And so you said because of that, it's going to cause markets to artificially pump. And so that's exactly what we've seen this year. Here we are. What is your take on the current macro landscape looking forward?
Well, the Fed has finally managed to do it by pushing the Fed funds rate above the CPI as it stands today, year over year. The June CPI numbers are going to come in next week, I think. And if you pull up a chart of the flat index, you'll find that the quick rise in the flat index ended June last year. And since June last year, it's been on a new trend line that is above the previous trend line from before the pandemic, but it's below the previous one. So considering that inflation is still there, but it decelerated, if you will, ever since they started QT, which is, very logical, the year-over-year changes has been cratering. And that's what you've seen all the headlines be about, the year-on-year CPI inflation going down. At the same time, you've seen the Fed still raise because every time the CPI dropped a little, they were like, no, core inflation is still too high. And then core dropped a bit, and they're like, no, super core is still too high. So they've been trying to make excuses to fight, to quote-unquote, fight inflation at rates where they are, not knowing that they really should be higher because the CPI is borked anyway as a measure. I mean, we've talked a lot about the CPI over the past few years, but honestly, the whole thing is just crap anyway. The only reason it stayed up for so long, or it took so long to go up, is because it doesn't accurately measure owners' rents. The Zillow index spiked much sooner than the CPI even went up. And then the Zillow index already started falling because, the credit was cut off. So where's the money going to come from for more growth? And that's when the CPI continued to go up because that's the lag in the CPI. So what the actual truth is, and I don't really think Shadow Stats is right either. I don't think CPI is that high as they say it is. The economy has changed a bit since the 80s. But overall, I don't really have a clue where inflation really is, and neither does anybody else.
Gotcha. No, but that is huge. So before rates were lower than inflation, which means that, we are still in this artificially liquidity-induced bubble, but you're saying now it's actually higher, which means that we're in dangerous territory, right? In terms of inflationary effects.
It was only natural that we were going to end up here because they were intent on fighting inflation. And if you are intent on fighting inflation, just continue to try and fight it best you can. Even if they weren't fast enough back then, eventually they're going to do something. So M1 and M2 have started to go down, which effectively means year-over-year deflation. However, the reason why you haven't seen that is because of stuff I've been saying longer than a year ago, is that deflation isn't going to be given a chance because of the excessive amount of money we printed previously. So if you look at the M2, for instance, and you can pull up the chart if you want, that from the peak, I don't know where it was, sometime last year, late last year. No, March or something, April, May there. M2 dropped over $1 trillion from that point onwards. And it's very simple. If M2 dropped means money went away, means deflation. It's really that simple. However, if you look before 2022, from 2020 onwards, end of 2019, they printed something like 5 or 6 trillion. So if M2 goes up by 6 trillion and then it drops $1 trillion, it's not enough.
Yeah.
Now, RRP adds to that, the reverse repo, is where they've hidden that liquidity for a while, and the repo went up to 2.2 trillion. But hell, add that 2.2 trillion to that trillion, that gets you 3.2 trillion. That's not 6.
Right.
Still not enough. That's getting us back to the liquidity of the end of 2019, which people might have already forgotten. We were printing at the end of 2019, thanks to the repo crisis, 60 billion QE a month. And they printed $500 billion at the end of 2019, just to get us through the end of the year without any crash. That was before COVID. The situation we're trying to get back to.
Yeah, no, I know. And see, that's the issue. And so before we were still in the stimulus mode at the beginning of the year. Well, now are we moving into the crashing, breaking thing bubble period where things start to really get damaged because they're starting to do some actual damage?
It's weird. It's complicated, really. I wish you could just say straight up yes and no, but we're not moving towards a future where things are going to be that clear cut. There's multiple problems that have been compensating for each other for a while now. And as we speak, it seems that we're going to hit a trigger on one of them, and that's the bond market. So on the one end, that's also one of the reasons why fighting inflation is taking so long, because the short end might be above the CPI, but the long end isn't. In fact, the long end just inverted the higher the Fed rates went. We're now at a full percent of inversion between the 10 and 2-year. And 10-year and 6 months at some point was damn near 2% inverted.
Wow.
Yeah, it's historical. Nobody trading right now, except for the really old guys, have seen any situation comparable. And that was the inflation of the 70s and the 80s, and debt was a heck of a lot lower back then. So any solution now is going to be different. Has to be different.
Right.
Because they could just, run up the debt and go into deficit spending and have the government fix it back then. We can't do it now because deficit spending is the problem now. The interest in the national debt is skyrocketing.
In this artificially induced liquidity bubble boom, are they doing enough damage to really crash things? Because whenever they get to this point, don't we have a 2008, a 2020?
Well, that's what you have to realize, is that we're working at such giant scales of such insane amounts that if we do nothing, situation will crash. It's that simple. Doing nothing is no longer an option, which is why it's all coming down now and why we didn't have a lot of inflation before.
Right.
There are no good solutions anymore. So whatever they do, it'll cause a crash. But that's also why we're in this limbo, specifically created by the Fed, because if they had just let the banks fail in March, then depositors would have lost their money. Savers, many people would just have money in the bank. If they had lost their money go poof. Money go poof, M2 drop. M2 drop, deflation. What did they do? They invented a new 4-letter acronym program, and Fed assets spiked.
Right.
Ever since March, that number's been going up. I think it's the BTFP program.
Mm-hmm.
It's just steadily going up. What that program does, it allows banks to post their collateral to the Fed for a loan, which is at par, valuing the collateral at par, rather than valuing the collateral at market value. So if you have commercial real estate on the books, which has decreased in value a lot since interest rates went up, then you can't sell that in the market because you have to write down and get losses. If you get losses from those sales, if you're trying to attract more liquidity, you're going to take a hit to capital buffers, which need rebuilding, which means attracting more liquidity, means selling more that's underwater. So you lose more. You need to attract more liquidity. Bank dies.
Yep.
It's a debt spiral.
Yep.
The Fed is basically intervening in that temporarily by saying, okay, we'll take your collateral. You can get a loan for it, which they wouldn't be able to get anywhere else. But we'll also value it as if it was still whatever you bought it for. So they bought it for 1,000 2 years ago. It's worth 700 now, but they get a loan for 1,000, valued at par. So that provides a stopgap for the whole situation. What the Fed is hoping that it just goes away.
Yeah.
But what it's actually doing is eating more into the profitability of the banks because it's not a gift, it's a loan. That money has to come back. how are the banks going to attract the money to pay back the Fed? They're not. Meanwhile, the Fed does charge an interest on this loan, which adds to their debt carrying problems. And one of the problems they have is that because interest rates are going up, they need to pay people interest over the loans they've previously already made. So there is no solution to this. It's dead simple. You bought a bond at $100. It's now worth 70. You done fucked up.
Yes.
And the taxpayer currently does not want to eat that loss because the taxpayer is suffering under inflation and increased costs of everything. And the government also asking for more money because everybody needs more money right now. So, they don't actually want to give money to the banks. They don't want to bail out the banks. So it's politically untenable. Therefore, the Fed just stepped in with a 4-letter program, as they usually do, to keep the situation going until the crisis gets bad enough where they have to go to the people and say, okay, if you don't give them money now, tomorrow we're all dead.
Yep.
And then the people are like, oh, fine.
Exactly. So we've been here before. The Fed is doing what they're doing. The market's about to crater. And so they're just going to step in again with a massive bazooka and prop it back up, right?
If the market craters. You see, I'm not really sure what section in the market is supposed to crater. I mean, technically speaking, if the entire market, I do mean the entirety of the NASDAQ, S&P, and Dow Jones is just fine. All those companies do nothing at all, except for the 7 biggest. And they just half in value, we get a market crash of like 25, 30%. I don't think they have to trade at these many times sales. I don't think NVIDIA is worth what it's currently worth, even with this AI bullshit, because AI is bullshit. I know you want to ask questions about that, so we can get into that next.
Yeah.
But the reason, what I just want to say about it is that the scale, as I was alluding to earlier, so large that not just did we have an everything bubble in 2019, they printed trillions and trillions to prevent the everything bubble from deflating, creating a super everything bubble. Now, last year, because they tried to pull the reins in because they finally went too far and the inflation came back, the tech bubble collapsed. That bottomed in October last year. And that's why I also said that the markets were going up, because the pattern showed that the markets had bottomed. In order for the real estate bubble, the commercial real estate bubble and everything, to not deflate too much, to prevent what happened in March of 2022, or at least make it not so bad, they started reflating the biotech bubble that had just died by creating an AI bubble. And keeping the other big tech stocks like Tesla and Apple and such, up. So this is the situation we're in. We have a double top right now. The market's going to double top. And the double top consists of a big tech bubble followed by a slightly smaller tech bubble. So the entirety of 2000 is taking place on top of the actual bubble. That's the scale of things. That we think that the bubble we're in now is just normal behavior. Pull up a long-term NASDAQ chart, one that goes from now back to, say, the 80s or something. You need to have 2000, 2008, and the current situation all in one chart. Then put the anatomy of a bubble right next to it. You've seen that picture, right? The shape.
Yep.
You'll see that we are in the return to normal phase right now. AI is the return to normal phase. Because we were in a tech bubble, we thought it was never going to end. Then the credit got cut off. We cratered, we bottomed, and now we're in AI. The good times are back again. AI is going to fix everything, baby. Return to normal. The tech bubble's back. The companies are worth everything again. How do you think that's going to end? The same way it's always ended in history. With the exception that this time, the return to mean phase is so far down that we cannot let it happen. So many things will break. So many people will die. Literally die to try and return to the mean, that the people will vote out anybody who tries to return to the mean. They'll vote in anybody who promises to print money again and make it stop. So this time, I think we are going to get a crash because it's inevitable. The Fed just doesn't want to listen. The leaders don't want to listen. Biden doesn't want to listen. The European Union doesn't want to listen because this is also not located in just America. Like the rest of Europe has gone just as crazy.
Yeah.
It has to end sometime, rather or other. And the historical patterns say it has to end soon. So I really think that because it's such a concentrated crash, it's such a large amount of wealth lost that nobody's going to want to let it happen. That instead of a peak, a valley, return to normal, and a crash down, I think by the point we hit capitulation, we're going to curve back up. They're going to print such an amount of money to not have us return to the mean that this overshoot is so large that leads to hyperinflation. The system finally breaks. And that ties in what I've said before. You've heard me say it before, how the bond market will be saved by sacrificing the currencies.
Yeah.
Because how this is going to exhibit itself in the bond market, of course, is would you lend people like that money? Of course you wouldn't. So the interest rates go up until somebody's willing to lend them money, which means that the interest rates go higher than the country can afford, which means that they have to do something about it. Otherwise, they can't lend any money anymore, which means yield curve control or something like that, which means that the Fed monetizes the government's debt. How are they going to do that? They print new money. Thus, the bond market is saved and the currency is destroyed.
Exactly. See, that makes so much sense. So the currency is debased. What does that do to assets? Doesn't that cause assets priced in the currency?
All prices go up. Shit assets, good assets, doesn't matter. Anything that's not nailed down, and most of the stuff that is just going to go up in number. Not value. Number.
Right.
And it becomes increasingly important to keep that in mind going forward.
Right. So does that cause a bubble in speculative assets that could just go?
No, speculative assets die over time because the situation we're in right now is there's too much liquidity, but the liquidity still has the value it previously had. We've had inflation, but it's like been 25% over the course of 2.5 years, something like that. It's a lot, but not historically a huge amount. You know, the 70s, 60s, we've been here before. That will get worse. Much, much worse. To historical levels we've never seen before. At that point, people don't want the liquidity itself anymore. They've had enough. They're trying to get rid of it. But if everybody tries to get rid of liquidity, I'm effectively saying everybody's trying to spend their money. If they're trying to spend their money, well, they have to have something to spend money on. So literally everything goes up in price because that's where the money is going. But since money isn't destroyed and the person receiving that money now has money he doesn't want, well, he's just going to give it to somebody else. But that somebody else gets money that they don't want, and we are all going to play a game of hot potato, which increases the prices of assets. But this is why I have to say that relativity is more important than anything else. Because what does hold its value in such a situation and what doesn't is determined by what goes up faster than inflation and what goes up slower than inflation. It's no longer a case of prices go up or prices go down. No, it's a case of everything goes up, but some things go up slower than inflation. Like this is a good company. This is inflation. This is a bad company.
Okay. Yeah.
You see that end there? Mm-hmm. That's the problem. More and more companies are going to go bankrupt, even when their share prices go up, because they simply can't go up fast enough.
Right. Okay.
They can't attract enough capital fast enough. They can't raise their wages of their people fast enough. People will find new jobs. You get a brain drain. The quality of the product suffer. Products are bought less because, people start prioritizing their currency towards more assets to have more value. Thus, your company gets even less income. You have to lend more to make up the difference, but interest rates are sky high, which just exacerbates the problem. And where's that going to lead? To bankruptcy, obviously. But the share price goes up until they announce the bankruptcy.
Yes, in nominal terms, yeah.
Yeah. In the beginning, it's going to be months, then it's going to be weeks, then it's going to be days. But by the time we hit days and everybody's like, oh, it's Weimar, well, a lot of people are already fucked, aren't they?
Exactly. So this makes so much sense. I got your prediction, and it makes a lot of sense. So so in that scenario where everything goes up, the best stuff will outperform the weaker stuff. Obviously, the guy living paycheck to paycheck, what happens to that person in this environment?
He dies. What do you want me to say?
No, I know it's not great for people that don't have these assets, right?
If they only have debt, especially variable debt, so the interest rate goes up with whatever the government bonds are doing, just walk away. It's your only hope. Just walk away. Literally, just walk away from everything. If your house isn't yours, if your car isn't yours, heck, if your wife isn't even yours, no, I don't know. just walk away.
Yeah. I'm telling you, it's such a messed up situation, right? So you're saying the rich are going to get extremely rich and the poor are going to get extremely poor, right?
No. Everyone's going to get poorer, but it's going to be weird.
Yeah.
So everyone loses purchasing power,
Yeah.
while everyone gains money, and the rich are still better off. Well, let me explain this. So let's say you have 100 and I have 1,000. And because of that, you can buy 100 breads of a buck and I can buy 1,000 breads of a buck. Now, if bread goes to $2, you have to obtain another 100 to maintain your purchasing power. I have to obtain another 1,000. But I am connected. I've got passive income. I've got real assets and such which provide yield. So in the end, it's going to be easier for me to attract 1,000 than it is for you to attract 100. So that is where I gain in the first sense. Yeah. Later, though, because things go up faster, it won't be as easy to attract money for anyone. And because a certain level of money requires you to put your money in a certain limited amount of assets, like real estate or such, that won't hold their money, their value perfectly, the rich start to lose money too. However, if you lose another 20% of your purchasing power, so you go from 200 to 400, but instead of 400, you hit 360. So you miss that 20%. And the rich go up from, goes up from 2,000 to 3,800.
Yeah.
Now I'm missing 10%. We both lost purchasing power, but you've lost more than me. Thus, relatively speaking, I can afford 900 breads, where previously I could afford 1,000. It's 10%. But you could afford 100 breads previously, and now you can afford only 80. That's 20%.
Yeah.
So I have, in objective terms, I've lost more money than you because I lost 100 breads worth of money. But percentage-wise, I lost less purchasing power than you did. Therefore, you became poorer than me.
Yeah.
So now you've lost twice comparatively to me.
Yes, that makes sense.
And that second one in hyperinflation especially is the one where you hear the comments from the Weimar situation of the poor seem to lose everything, but the rich seem to be fine. Maybe it's easier to think about it in terms of stocks. You know how Elon Musk is the richest man in the world, but it's only because he owns a lot of Tesla stock, and Tesla stock is high right now in value. He doesn't actually have something like $250 billion in cash.
Right.
If he were to try and sell his shares to get $250 billion in cash, the value of those shares would drop as he sold more and more. Thus, he would not actually be able to realize $250 billion worth of cash. He would end up with something like $30 billion. But that's also why billionaires don't actually care about the share price and how much money they have in shares. What they care about is if they have 10 billion worth of shares first, and then they go up to 200 billion worth of shares, and they sell 10 billion of it, they get 10 billion in cash. They didn't have 10 billion in cash before. And cash allows them to buy a lot of other things. Shares don't do anything. They just go up and down and provide ownership of company. That's it. Maybe dividends if you're lucky.
Yeah.
But cash gets you houses, cars, clubs, parties, all that. So what you want is cash, but what you have is shares. So if the shares go to 30 times as much, you get 10 billion cash out of it, and then the shares crash to like twice what they used to be. Well, everybody who bought the shares at the top and lost, they're going to be pissed, but you ain't. You don't care. And yeah, okay, you can't extract as much value from the money as money as from the market as before. But why do you care? You've got 10 fucking billion.
Yeah. No, I'm with you. So I guess okay, looking back over the last 20 years, we had massive currency debasement. The stuff that did the best were the Amazon, like over 20 years, the Amazons, the Apples, the Microsofts of the world. So looking to the next 20 years, do you think these big tech monopolies, these revolutionary technology companies will continue to outperform? Or what are you thinking for the next 20 years?
They've gone up so long, they're going to go down. We've had a 40-year bond bull market. 40 years, bonds have gone down in interest rates.
Right.
That has led us to create basically an economy based on that fact completely.
Right.
And the tech companies grew up in that period. In fact, the Amazon model is named as such because what Amazon did. You corner a market with cheap prices, you run at a loss for years, and then you jack it up if you have control, and that's where your profit comes from.
Yep.
You can only do that if you can burn investor money for years and years and years, because how are you going to cover the deficit otherwise?
Yeah.
We're out of that situation now. Bond yields will go up. Well, they'll fluctuate, of course, but the trend now is up because we've got too much debt. The country isn't worth as much as it used to be.
Yeah.
There's a much bigger risk that the money never comes back, which we all know it will never happen. The interest rate of America has to go up. In essence, in its very essence, the interest rate on a bond is an expression of risk. The risk that the money doesn't come back. If there's a guarantee that the money comes back, an absolute ironclad guarantee, then why would you even charge interest? There's okay, you can get a bit of profit, but just be nice to your friends. I don't charge my family members interest either if I have to lend them money, because I just think that's not done. No, it's not their fault that the government keeps devaluing the currency, and I'm their friend. I'm fine with helping them out.
Yeah.
So, in the end, even the interest rate on government bonds is an expression of risk. And since we now know that the government can't unlimited print money anymore because inflation doesn't go away, the Fed can't monetize it because inflation doesn't go away, we know the money isn't coming back because the debt is too large. I'm simply not comfortable by lending America money for 30 years at this point. Yeah. So why is the 30-year bond still at 4% and not, say, 20%? They give me 20% interest on a 30-year bond. I might consider it because there's still a chance I can sell it before the due date. I don't think 20% will be enough over 30 years, but I do think it will be enough to create a market for the bond currently.
Yeah. That's fascinating. So you're saying they're going to print money. It's going to cause things to go up, but it's not going to bring interest rates down.
Nope, not anymore.
That's huge.
It can, but again, you have to realize that how they used to do that is basically the Fed would print new money, but that new money was forced to stay in specific accounts. That is the bank's reserves, which you heard about then. Because it's forced to stay in specific accounts, it can't circulate in the economy, which is why for 10 years you didn't see any inflation. Basically, is the answer to the question, if you print $1 trillion, but it never leaves the account you printed into, does it create inflation? Answer is no, it doesn't. We've tested it. Literally over a span of 10 years, we tested that. However, money being money and money having universal utility value, meaning it's useful to everyone, if there isn't a perfect lock on that account, meaning it can't move in any way, shape, or form, it will find a way out. And in this case, because the banks needed those bank reserves to stabilize the system, if it was completely useless money, it would not have stabilized the system. Because what are you giving the banks? You're giving them money they can never use to prop themselves up. What's the point then? So the lock was imperfect, and as such, the money found its way to the general market. It couldn't go to the general economy, but it could go to the market because it could provide backing for new loans. That was part of the whole thing that the Fed would try to do. They tried to restart the loan engine of the banks to try and restart the economy in 2009. So since that was an availability, they actually lent out the money, to hedge funds and stuff. And you look at the NASDAQ in 2009, it bottomed at 1,000 something. I think 1,400, actually, something like that. And it recently topped, not too long ago, at 16,000. For last year. That's a 11 times increase. What do you mean no hyperinflation? That's the same. Like if we had paid for bread with Tesla stock, then bread would have been 10 times as expensive as it used to be. Forget $3 to $4; it would have been $10 plus. You go from $1 to $10 at least.
Right.
So it's hard to wrap your head around, but in hyperinflation, money is cheap, very cheap, extremely cheap. It's so cheap, everybody's giving it away.
Yeah.
So what we have now is they're trying to stop that inflationary process by making money expensive, by restricting credit, considering that bank credit is how most new money is made.
Yeah.
However, that became too restrictive last year, so they changed something, and that's why the markets bounced in October.
Yeah.
And now they're trying to change stuff again because they're trying to bring stuff down again because they don't want inflation to go out of control. So they're hoping for the sine wave of the markets, but it's not going to go down like that because the bond market is starting to go up. Now with the debt ceiling resolved and the government issuing down near $1 trillion in debt in a month is TARP. The government issued more than TARP in size over the last month.
Right.
Now, they covered for it with money out of the RRP. But remember what we said earlier, that RRP was one of the ways they got excess liquidity out of the market. Remember?
Yeah.
RRP just dropped by $400 billion because the TGA went up with $400 billion. That's the Treasury General account. That's the money that the Treasury will spend into the general economy.
Yeah.
Inflation's going to come back because it's new money that's going to enter the rest of the economy.
I see what you're saying. So inflation is sticky, but the bond bull market is over. Assets go up in value as an illusion, but they're really going up in nominal terms. So
Yes.
Got it.
And everybody's out there, prices are going down. We must have deflation now. Prices are going up. We have inflation. No. Price inflation is a symptom of currency inflation. You have more money in the economy, you get higher prices. You have less money in the economy, you get lower prices. It's not that hard.
Right. No, you called all this for sure, even when we had that deflation illusion. But anyway, so going back, so at the same time as all of this is happening, we could talk for 3 hours on de-dollarization, right? So you have the problems at home, but then how does de-dollarization fit into this? Does it just magnify the situation in terms of debasement?
Well, the reason why de-dollarization is happening is because we devalued our currencies. It's the other way around. It's not that we're devaluing our currencies because of de-dollarization. It's everybody's ditching the dollar because the dollar keeps getting devalued and they're sick of it. In addition to the dollar no longer being trustworthy, the confiscating of Afghanistan and Russian central bank assets, the freezing of the Russian assets and Afghanistan assets. So it's a taboo that's been broken now, and de-dollarization will happen regardless of the value of the dollar. It's simply that anybody who doesn't like America and who America doesn't like, they're no longer incentivized to use the dollar for anything because it's a risk that America says, well, we'll just take your dollars then. Mm-hmm. You are no longer allowed to use dollars. And then your economy crashes. It's too much of a risk. Russia Today recently said that the BRICS are developing a new common currency that's going to be gold backed. And it doesn't really matter whether that works or not. This is going to happen because they have to. Russia can't use the dollars anymore, and it's only a question of when the rest of Asia can't anymore. America is becoming more belligerent towards China, and China isn't that nice themselves either. So that entire sphere of influence around China They're not likely to use dollars anymore. It's too much of a risk.
Right.
So they have to come up with an alternative, whether they like to or not, whether it works or not. And the question of working here, you got to realize it's not a binary question. It's not yes, it works or no, it doesn't. It can work somewhat. It can work great. It can work good. It can work okay. There's many different ways in which it can work, and it doesn't have to be better than the current system. It just has to last longer. Because the current system is dead and everybody knows it. It's just how everybody goes about preparing for that event that is different.
Exactly. And so I read a book on Zimbabwe inflation, and I remember reading that there was a lot of speculation in the stock market. That was like a big thing that people were doing as it went up. So as people are watching this, they're thinking about, oh, where am I going to put my money? You know, obviously there will be lots of speculation. What does that look like?
The people who have questions are the people who are left in the dark, who can't afford such services, generally retail, who are also most taken advantage of. So they have the most questions of what am I really supposed to do? And that's because the answer is completely utterly boring. Against the devaluation like this, against hyperinflation and such, an economic crash of epic proportions, just go with the historical norm. Gold. It's always worked. It's the reason why BRICS is going to gold, because you can trust the metal itself. Gold doesn't interact with many things. It's a very non-reactive element. So if you take a gold bar and you put it in a vault, 1,000 years later, you pull from it the exact same gold bar. You do that with an iron bar, it will rust, and whatever you pull out of the vault is no longer useful. If it's no longer useful, it no longer has value. Gold will be useful because the things we use it for rely on its properties of non-reactiveness, which is going to be there forever because it's non-reactive. Silver, same thing, except that it also oxidizes, so it needs to polish every once in a while. But other than that, no, the oxidation performs a protective layer. So a lot the same as with aluminium, which makes it not really interact with anything else. That's why we call it precious metals. The reason we call it precious metals is because if you used to have an iron plate you ate off of it, the rust made you go crazy, and that didn't happen with silver and gold stuff. They had to polish iron cutlery every single day to make sure it didn't rust. With silver, you have to polish it every so often. With gold, it just stays shiny.
Got it. So that's going to outperform inflation is what you're saying. So the question here is, there's obviously lots of technological innovation, right? This is augmented reality, artificial intelligence, robotics, brand new things, space exploration. Doesn't that add productivity to the economy?
There's multiple ways to beat inflation. The equation for that is very simple. If you have more demand than you used to have for something, yet the supply hasn't changed, the value will go up. Now, inflation is simply the nominal change in the currency itself. That has nothing to do with supply and demand of the product. Of course, in hyperinflation, overall general economic demand will crater as people lose their purchasing power. However, if you have a particular thing that didn't have a market before, but does have a market now, and that market is growing, then the demand is growing. Supply is probably lagging behind because people can want things a lot faster than we can build them. And therefore, it will beat inflation. But it will also beat inflation only for as long as demand is increasing over supply. If supply starts to increase over demand, even if demand itself is still increasing, then the price will start to lag behind inflation, even when nominal number still goes up. Now, if you want to keep all of that in mind, be my guest, try and find something, but you can also just buy fucking gold.
But that is a reality, right? There will be exponential growth in revolutionary technologies that can increase economic growth, right?
Sure. Find them. There's a lot of bullshit out there.
Yeah, you don't think it's artificial intelligence or robotics?
Maybe, but not the current form. Not LLMs, not ChatGPT, not any of that. They're bullshit generators. They'll take over some jobs because a lot of jobs are bullshit generators, and they'll just be better at it. There's a niche for it where CEOs can just ask the bot after everyone in the entire organization throws their data directly into the bot. But that's something different from ChatGPT. That's not a bot that's connected to the internet and you just ask it for information and you then trust that information. You can't do that.
Yeah.
Because the LLMs just give you bullshit and you won't know why. You won't know that it's bullshit. You just start believing more and more misinformation. Because, you no longer have the tools to figure out what the bot has taken as truth and what it doesn't. Because the bot doesn't think. It just assumes. Always. Mm-hmm. Now, there is some place for the technique of LLMs and neural nets, such things that anything that's digital and laborious, we talked about this earlier, like animation, because making 3D animations is extremely laborious, takes a lot of time. The pipeline of tools to make that faster is not very great. We only have motion capture, to be honest. So you've got either manual keyframing animation or motion capture, and that still needs to be cleaned up. And an AI that's been fed a lot of animations, and that you ask to make a certain animation will get you like 80 to 90% of the way there. And then you clean that up, and that probably provides a lot of pipeline efficiency for gaming companies, for instance. So something like that. Okay. So there will be some productivity increase. But what people think that there's going to be robots walking around and servicing us like butlers, that's not going to happen for another 50 years, if that. Even trapped inside a PC, that's not going to happen. They're not smart.
What about self-driving cars? That could be huge.
Could be huge. It's not going to happen. Not within the next 20 years. They might be able to get it done locally as a sort of tourist attraction almost, where they focus on one city, get one city right. But a lot of that will be not because the AI is so smart, but because humans started manually correcting the AI, where they basically leave 90% up to the AI. Then the 10% of edge cases, they're all manually fixing, which works for a city. But if you try to apply that to a nation, it's never going to happen. There's other things that we still haven't even thought about that's going to provide problems in the future. Let me just give you an example, a little scoop. I'm sure that nobody's mentioned this before. LiDAR, right? That all the good autonomous cars have a LiDAR setup. Oh, it's getting better and everything is great and all. We can't use that. So far, it's just been a couple of test vehicles, and that's fine. But we know that shining a laser in a person's eyes isn't very good for their eyes. It's, in fact, very, very bad. And a LiDAR is just a laser. Might be a low-powered laser, but it is a laser. So imagine if all the cars driving around have a laser on their roof, just shining a beam in every direction a million times a second.
Right.
Yeah, I think that's going to provide some eye problems. I think it would not take very long before people living in a particular area where, these things start to cluster, that they start reporting some weird spots in their eyes that don't go away. Well, that's basically your eye receptors being burned out by the laser. You can do the same with a phone camera. You can burn the pixels out and you get these black spots on the picture. Kind of works the same. So if you want to, test if it's dangerous, just use a smartphone camera, see what happens. And like I said, I don't think the couple of test cars out there are dangerous because we're humans. We can take a beating in some respects. But once you start including that on every single car roof you see, is it really still not dangerous? What if the photo, once or twice hitting the same receptor, fine. But millions of times every day? Not for me, thank you.
Right. Wow.
Same with electric vehicles. We've not seen a parking garage full of electric vehicles yet. So we've also not seen a parking garage full of electric vehicles burned down. That's a lot of heat. Especially if all of them are charging, because what else would you do with a parked car that's electric? You charge it because you need to charge to use it. So That's a lot of heat. That can bring the building down easily. Easily. Concrete is a magic material, it cracks under heat.
Anything else on your mind that you've been researching that you want to talk about?
We have so many current problems around crypto that just aren't solved. It's now, coin market cap is more than 26,000 listed. And at least half of them have no volume whatsoever. This can't go on like this. Now,
Right.
I understand it's a industry that's trying to mature, but it's wrecked so much in its attempts to mature that it needs another decade in the oven. There will be a collapse. A lot of these coins will go away. And because there's no longer any greater fools to tap into, because crypto is now well known amongst the general populace, everyone's heard of it, the greater fools have dried up. So now you have to make do with the people who actually think it has value. And as I just ranted earlier on, there's not a lot of them people around. Thus, there will be an epic crash until only the people who see value are left. Those will be the ones that generate the new round of systems for the new, not even bubble, just a new cycle. And that cycle is more interesting because the fraudsters and the scammers don't stand a chance anymore. Why? Because everybody who's legit has to work their ass off to convince even one person that, no, I'm not one of the scammers. And when people are so skeptical about an entire industry, you just weed out the scammers easily. Because the scammers are not legitimate businesses, thus they cannot explain their value, thus they never get a chance. And the people who can explain their value have to do it 10, 20, 30 times, but eventually somebody else will get it. Right. As long as, like, they say, well, this is how we have value. And somebody else says, well, no, I don't believe that. And then they're like, yes, we do, because this, and this, and it works that, and that way, and that leads to this result, which has value. And they're like, okay, but what about this then? And the other guy goes, well, this leads to that, and it leads to this, and then eventually... this whole conversation that needs to happen. And after about 5 years, the other person on the other end is like, okay, I can't find any counter arguments anymore. I guess it has value. I'll take a small position to make you go away.
Right.
And then the curve starts going up again because they take a small position, they look at it, they see it grow, they get interested, they do research, they find out it does have value, they start talking to their friends about it, they start taking a small position, and we get back to where we are today. Or, well, not today, but like 3-4 years ago.
Makes sense.
That's business cycles. Crypto isn't immune to business cycles.
Right, it makes sense. Yeah.
So it has to go through the same thing where the fraudsters and the scammers just have to go away. And God, I'm just telling people to just stay the fuck out of it because it's going to be a steamroller when that happens. When Binance goes, and Binance will go, that's going to lock up the majority of money in crypto. It's not going to be able to move even if it's there because it's now caught up in a bankruptcy process. They've already been sued by the SEC, and CZ is personally named for a lot of bullshit. Recently, on the same day, it was announced that the not the chief compliance officer, but I think the second in command of compliance, the general counsel, and the head PR guy all left or were planning to leave.
Yeah.
CZ came out immediately, said it was false, and within 2 hours, you had 2 long threads of 2 executives leaving.
Right.
He said maybe one will leave. So he lied, immediately got proven false, which totally means that they're bullshitting. There's massive trouble ahead. Stay the fuck away. Bitfinex will die. OKX will die. Well, that's not one in the US, but internationally it's known. Hiobi will die. Tron will go. Anything that Justin Sun has touched is now nuclear waste, and you need to stay the hell away from it. USDJ, USDD, USDT, Tron, US Tether, God, anything Justin Sun has touched, do not go near it. Stay the fuck away. It's a matter of time. Can't tell you when, but I swear to God, it's a matter of time before that entire empire implodes. I can tell you that OKX, the vast majority of wallets, and we're talking about, there's maybe 100, 200 legitimate wallets out of millions. All those wallets that have an amount in them, all fake. I looked through them myself. thousands upon thousands of wallets which have OKB in it, which is OKX's own exchange token, like FTT was from FTX. Thousands upon thousands of wallets that have one transaction in them the day it was disputed. And it's just parked there. And the key thing to realize about all these wallets is that they have round numbers. There's not a decimal in sight. With how fractional that crypto is, with gas fees being fractional, it's virtually impossible that if you've traded crypto even once in your lifetime, you don't have a full round amount. You've got some sort of fractional amount. Not these wallets. I think you can even see it on Etherscan. Just look at anything below the top 10.
Yeah. Yeah, no fractions.
No fractions whatsoever.
Decimals. It's crazy.
And on OKLink, it goes to 10,000 entries.
Mm-hmm.
Number 10,000, still the same pattern.
Wow.
Oh, yes. On page 20, there are some fractions. It's 0.5. So 50.5. Of course, half, exactly half. It's so obviously a scam. Like the vast supply of OKB is in dead accounts that were just, put there to make it appear like there's a lot more demand for this coin than there is. I don't know if they'll ever rug pull it. They've got no need to, because it's basically there to pump up OKX's value. But they probably have a lot of this OKB on their own balance sheet, just like FTT and FTX had. And they just get fiat dollar loans against their own balance sheet, because they say we have this asset that's worth this much, but in reality it's worth nowhere near that. So they're frauds. But they're based in the Seychelles, and they don't operate in a lot of countries. They've been banned from the US or something. They just never operate in the US. But they operate in Asia, and they listed as being active in France as well. But just to go to coin market cap and look at what the market cap is of OKB, and it's fully diluted, 12.6 billion. The current market cap is 2.5 billion. So it's nowhere near that. It can't be anywhere near that.
Right.
And it's recently gone up to a new all-time high and just went sideways from there.
Yep.
So somebody pumped the very little liquidity that's out there, but it's all just a giant scam.
Wow.
And OKX is an exchange nobody's even talking about right now.
Well, anyway, man, I appreciate all the different perspectives. You have a unique perspective that you bring to the market. It's been amazing. Unfortunately, we hit the time limit.
Yep.
But anything else you want to share, please do, including where we can find you.
Okay. Well, you can find me on Twitter, Deso, at Deso Games. I stream on Thursdays and Saturdays on Twitch, the twitch.tv/Deso Games. And that's most of my activity right now, because I'm working on my own company, my own inventions. I'm going through a patent process. First application was denied. We spent some more money, sent a reply back. You have to wait on that approximately 2 to 5 months. So it's a lot of waiting. I'm doing things in parallel. So I with long COVID on top of that, I'm just very focused right now on getting that shit to happen. I've done many things now in finance, crypto, and everything. I'm ready for something real. And what I've got cooking is hard to put into words when I can't talk about it yet. Because, this part of my strategy is that if I can't get a patent because the patent office just refuses to give it, I'll go straight into production. But then I can't afford anybody having to copy it before I've, got the investment and everything up and running. Therefore, secrecy is unfortunately still required. But in March of 2024, I should have hit the 18-month limit after submitting my patent, where the submission becomes public knowledge. So even if I want to, I can't hide it longer than that. And I'm very much, that's why I'm active now in preparing for such an event and getting this shit on the road. And in the future, well, things will look a lot more bright.